All right, welcome back to the Bear Trap Discord podcast. My name is John Kirby. My co-host is Vic. All chart credits, as always, go out to Occulocracy, otherwise known as Oc. And this episode is pretty similar to the last ones in that we're reflecting on this past week of trade and looking ahead, except that those two components are somewhat blended because this past week was so decisive. We had mega cap earnings, which we go into in some depth, discussing them by means of an options metric known as skew, which is familiar and widely used by institutional traders, but maybe somewhat unfamiliar to many retail traders. And we have some pretty solid projections for what's to come until the end of the year. Vic came fully prepared with an in-depth reading of open interest and gamma exposure charts in the main indexes. We would appreciate any feedback that you guys have. We're learning as we go along. We hope that you'll stick around for the ride. Enjoy.
All right. Where are we starting out today? Let's do this.
So I'm thinking we should just take a look at the normal charts, the normal people charts, just so that we can see where we are.
The normal people. Guys are just regular folk now.
Yeah.
Yeah, what do you
that's funny, my charts aren't even updated. But we're at 390 for everybody.
Yep. And did you see that happening last week? We talked about sort of our projections last week, and I'm not sure I saw 390 or 388 coming.
Well, we had that range set up from 360 to 380, or that was your prediction. I just wanted to be short vol in general still. Got a nice move in the VIX from I think around 31 down to the 26 handle, 27 handle.
Yep.
So really nice vol compression there. And I think what was surprising to me was the move. Once we hit 29, I thought we were going to stay around there. In other words, stay around 380. And then we got that nice move all the way down to 27. So yeah, that last bit I was not expecting as well.
Here's something that caught me off guard was, the short VIX was correct. I didn't realize how much positioning was actually bearish. Pull up that OI for SPY.
All right.
And this right here, I thought a lot of that after what had happened the previous week, I thought a lot of it would be gone on Monday. Like people would have, either rolled out of their positions or closed them or whatever, but it's still the same. Like they're very stubborn. And you can see down here at these lower areas, sort of the big levels, the 360, the 350. I think if I even looked at more strikes, there's a lot at 340 as well.
The other thing that catches my eye here is that these are pretty short dated now, right? Like
correct. Yeah. Yep.
And you can tell that just from the color, right? Like it's these nice oranges down here. That's all October 31st, November 2nd. Just these guys in here.
Look where it goes out to about November 18th or so. I think that's the next OPEX.
Yeah.
That's probably where we see the turn. I feel like, I don't know, Jim Carson, he's calling for a ripper to maybe 4,200 or more. So
that was my thesis. I'm not again getting ahead of ourselves, but that's what I had coming up, man, for the projections time.
Yeah. And if that's the case, that means that we're essentially of the mind that these bears that are sitting here, if we just take this as just kind of like a quick glance at the whole market, this is just the S&P 500. But if we're assuming that these bears are going to stay stubborn into the end of the year, like they're going to keep rolling their positions. Like right now, they're essentially into November 18th or so. They're bearish. After that OI, is it going to continue to look like this as we move up the chart? Are they going to keep rolling into higher strikes?
I don't think so. And part of the reason I don't think so is pretty subjective, but it's that, let me switch back to Thinkorswim here. If we look right over here in the corner, if you can see that, right, that's my SPY on a weekly. And we had that high at around 480, and that ripper that we had recently, everybody everybody learned there. I would hope everybody learned. And if you look at, we've just been zigzagging down. It's a really gentle descent, like we talked about last podcast, exactly what the Fed wants. And I wouldn't be surprised if we get, okay, another ripper up to 400, 4,100, and then a gentle descent or a not so gentle descent. But it's totally in line with the channel that we're in. I know we don't do technical analysis, but I'm just saying, not bizarre.
Your linear regressions and stuff, I mean, those are fine, because again, what we were talking about before we started was playing the edges. So I like having like a standard deviation or a statistical measure of, what the market could do. So yeah, I agree with this, that we could move back up towards those last swing highs. Very possible. But is it going to be based off of bullish call buying? Are we going to see this chart flip then, if that's the case? Are we going to see the OIs, the positioning, start dominating on the upside?
Well, here's a question. Where were we at? Like when we were right here, what was the GEX like?
Very, very bullish. It was incredible.
And then we had JPOW come out with some crazy announcement or something here. I remember that reversal day, and that was epic.
And so again, going back into, then I was not watching the open interest as much then. I was really just looking at GEX only. But yeah, it was very, very bullish. Like every day, every SPX day was just clear as day bullish. I didn't pay attention to this positioning as much, looking at the OI every day and having an understanding of why these lows will not break, because every time we go down there, the bear takes the opportunity to close his shorts. That's what I think is happening.
I agree. And I also think that that's why, I also have on another chart here, which maybe I can pull up, I have my linear regression as well on the VIX. Let's see if I can get this to show properly. It's kind of small down here because this wasn't exactly part of the plan, but
right.
Let's get this on a weekly and you guys will see exactly the same thing. If the thing will load. Okay, well, I can just tell you because I know what it looks like. Basically, we were hanging out at that 30 level the whole time, and pushing into the 40 would be like a 2 standard deviation on the weekly on the VIX. And again, we don't necessarily want to TA the VIX, but what that does tell you is that this market is sitting comfy at a 30 VIX, and at a 30 VIX, we can't get a flush down because, like you said, that means that puts are retaining their value. So market participants, there's no disincentive to stay in puts if the VIX stays that high, which means that every time the market goes down, you can sell out of your puts, cash out of them, because you know that it's outside of the mean and your puts haven't, there's no reason to hold them anymore when you're getting so much cash for them.
Here's another thesis that I was listening to the Jim podcast again today, and he was talking about this skew of the market right now into puts being in the 0 percentile right now. Whereas in some of the other melt up bull market modes, it was extreme levels. Right now, it's about as low as you could get being in the 0 percentile. And so that's another thesis that you might see bears continue to dominate the open interest all the way up to like 420 SPY.
Yeah.
Because it's so cheap to buy the tails right now. And he talks about this too, where, for a long time, people were selling those nickel puts just nonstop, 20% out of the money or whatever. He says he would not do that at all right now. He says it's worth it to just buy those.
100%. I mean, this is that sort of perfect combination where we have a really high VIX, but those tails aren't that expensive, right? Which means that if your tail pays out, it really pays out.
It's going to pay out a lot. Yeah. And so that makes sense to me why this chart looks like it does every single week, every single day, because, folks aren't buying to the upside. They just continue to buy to the downside because it's cheap.
Yeah.
And so every week, you got the short dated guys getting squeezed. But this was kind of like the first week we really had a breakup from the range. And I'm not sure if it's going to hold. We'll have to see. But I doubt that it holds personally. I think what you're going to see is a lot more of this, lows holding and sort of a slow grind up. But it might take a while. Like, I don't think we're going right to 420 this week. You know what I mean?
I think, I mean, Yeah, I mean, well, yeah, we can actually, since we're already doing it, we can go and take a look. This is a pretty good reason to think that we might not go to 420 this week. Um, you see that giant red bar of calls, right? And the issue here is it's a real inflection point, right? If we open on Monday above that guy, all those guys are going to start to gain value, and yeah, they could push us up, but most of the incentive here is to keep us there, or to keep us just below. So especially with a wall that large. So
One thing to look at with these too is, okay, something I noticed is if the gamma chart is opposite the OI chart, then expect the folks that are in the wherever they're positioned at on the OI, expect them to feel pain for the most part.
yeah, and I mean, but that would be an argument for the other side. That's an argument for us being able to hit 420 this week, or 410, because right, if we're looking at all these puts on the OI, or I mean, you can look at them in the gamma too. They're all the way down here, right? And for
But
context,
there's
to
not that
see,
much for this for at least this next couple expiries. There's not a
that's
lot.
true. They're
Again,
further out. They're further out.
they're further out, so the influence isn't as much. They have less of an incentive to essentially either hedge that gamma out or to be squeezed effectively. And so that was I kind of wanted to bring this up. This is a very important chart, because if you look at the delta curve for, say, Monday, Tuesday is going to be is it Tuesday, Wednesday is going to be very important.
Mm-hmm.
And so you look at those delta curves. Those delta curves are what are telling us what exactly.
Well, I mean, when I'm looking here, it looks like we go up, and there's actually not that much hedging that has to happen.
They don't need it. They don't need it to go that much higher.
Yeah.
If you think of the delta curves as sort of like your probability range, that's the way I always kind of think of it as.
Yeah, because they don't need it to go, like, if it's here, right, where this big lump is, that's kind of in the comfort zone.
Exactly.
It's not an issue.
I'm looking at the charts. I'm looking at this GEX. I'm going, I think they might try and get people a little FOMO'd into, and I think this all the time. Like, I'm always looking out for the rug, but it's like, I think this chart is pretty well set up for, hey, let's take it to like 394, 95-ish, hold it there, maybe Tuesday, and maybe even on Wednesday morning, and it really try to catch people off guard here. And what I would be looking for is that vol trigger to come up.
Yeah. This is kind of a bizarre GEX chart to me, actually. I don't know if you feel the same way, but to have this many calls, such a big bar right here, and to not see this delta hedging curve a little stronger to the upside is a little strange to me. Am I missing something there?
Well, that's cumulative delta or cumulative GEX. So I'm talking about the curves on the right and left side.
Oh, that's my bad then. That's my bad.
Okay, it's okay. I'm talking about the curves on the right and left side where, basically this chart shows you each expiry's delta curve, and you can always see where the hedging kind of lies, because it'll always be in an
Yeah, I see it. I see it now, and that actually makes a lot more sense. Yeah, this guy right here is relevant.
Yeah. And so if we think of gamma as, we were talking about this before, a gamma being the slope of the delta curve, right? Slope of deltas.
Mm-hmm.
You can see why that one, look at that delta curve right now compared to the others. And that's Monday.
Of course, the what would you call it? I mean,
the big gamma level is really affecting that curve.
Yeah, the derivative is zero of this guy. Like, the inflection point is literally right here on this curve.
Yep.
Yeah.
Exactly. So there's a little bit, like, when I look at this without doing anything, I'm going, this is like, if you're just an RSI trader and you see 85 print, I'm looking at this going, this is probably overbought. Like, this doesn't look like, it's not a very clean look to it. There's not a very clean distribution here. And the delta curve, we're kind of hitting the top of those delta curves even out into the future. There's not a lot of gamma built up there, so it's not really an incentive to go there.
Yeah.
it would obviously change with the OI. It would obviously change with an intraday. But as of the close, which I always found the weekly close of these charts is very important, and it's kind of like your weekly close on a price chart. It's going to be an important look. This is how everybody went home on the weekend.
Yeah, and that actually has me thinking here. I think that's right. Obviously, we'd expect to see a little more gamma up here, right? We'd want to call a ladder, right? If we were going to see us really squeeze up this week. And the other thing is, because these guys, the gamma out here is further dated, even though we had the open interest, which is shorter dated, because it's not significant gamma, it doesn't matter as much. That means that they're going to probably, the pain trade is going to be to keep price around here for a while until these bars are going to start to grow because there's less time on them. And at that point, that would give us fuel to actually start to break through some of these levels. And it'll start to change the delta curve.
Yeah, so that's another good point. The time is going to be a factor, and what's going to happen with that time is going to shrink those delta curves down. And so those longer dated, that's when they start to really feel the squeeze. And they're already kind of feeling it. You can see it because all those delta curves are saying it's like 0%. There's zero probability of going there. So like that 375 gamma level,
yeah,
the foot wall. But it's like right now, if you're just going to play probabilities, it's like we're not seeing 375 anytime soon. Maybe out into, let's see, some of those colors are going out into December.
Okay. Yeah, you can see there's that. Sometimes there's so many lines here. It's a little. That's why I was getting confused too with here we go. I'm trying to look for the green, and it's around here, right? Yep. So December would be on the put side, is around here, and so there's a little bit of probability there. I mean,
exactly. But yeah, exactly. So but there's not a lot. If you look at the green GEX, it's minimal. I mean, you're looking at a 100 million plus on just the 390. And you're seeing maybe like 10 million on some of those bars for December.
Yeah. My wager would be once they got this orange, because these red guys are going to go this week. These orange guys are the relevant ones, right? And then that would put us around mid-November.
They're the same as far as like their effect on the market is basically nothing at this point. I mean, the total bar is a lot, but if I were to say anything, you could probably see us push into that 396 on Monday. I would not be surprised by that, especially like you said, if we open up over 390 or around 390, they're just going to grind this thing right up into that expected range high for Monday.
Yeah. Yeah, which is right here, the 396, which is the Sigma.
Yeah. You said the market's happy where it's at, with the VIX where it was at 30. I mean, how much happier is it at VIX 25? What always happens with the market that I've noticed, I've been trading for like maybe 3.5 years, and I've watched the VIX go to 13 and I've watched the VIX go to like 60, 70. And when the VIX goes really, really low to like those 17, 18s, that's when the reversals always seem to come. And like the big ones, the big sell.
Yeah, it's just I think that this is going to be a little bit different just because we know, right, we have this pressure on the market coming from those rate hikes. And so that's keeping us at an elevated level. In other words, we're having this grind down, and we know more or less that we're going to keep grinding down. And so I would maybe reset that, give it another 10 points. I think that the 24 VIX handle, I remember that being really relevant even when, Ukraine was going off and everything. And so I would be surprised if that's
the skew of SPY that closed.
All right.
So something that's been helping is including the skew in all of this too, to kind of give you an idea. And so we've been talking about the skew. What does this skew sort of tell you? We're looking out to January of 23 here.
I mean, this is to me, this looks like some pretty heavy skew. I mean, obviously it's down a little bit, right? So if we're checking, right, we know VIX is around 25. That's why we have right here at spot skews at around 25. But it's
So here's
It's
something to
heavy.
look at on this chart is the historical volatility.
Mm-hmm.
Well, so you can see that right over there to the left, right above the graph.
Yeah, HV20 right here.
Yeah.
Right.
So we're looking at the implied vol levels versus the historical of the 20, historical of the 30. And we're seeing pretty normal stuff here. I mean, you see
Like we're underneath the historical yeah.
yeah, we're actually trading in, and I think this is kind of what Jim may be talking about too, is like the market is underpricing.
But that kind of goes to my previous point, saying that like, 24 vol would be something pretty low for this environment. Why would we shouldn't be expecting to get to 17 before we really crash, right? I feel like the 20s is fine.
You got to think about what is driving the vol down though, too, and what is bringing this volatility down, and a lot of that volatility suppression comes from central banks, comes from, obviously people aren't really worried about the future too much, and so is it justified to be trading IV under the historical vol on SPY right now? Essentially, I'm not sure personally.
No.
I don't think so, and I'm a super bear. I've been trying to work on that disease of mine to be super bearish all the time, but it's I don't see why we're so cheap right now.
Well, and I'm saying this from a vol seller's perspective, or I guess that's what I was doing the last 2 or 3 weeks. And it was obviously working really well. But this to me is where I start to get a little antsy. And like, yeah, I agree. I think we have a little bit more upside left. And I think that pointing out the OI down here is, instrumental to that. That could give us another week. That's what I was thinking about, like another week. That would get us into the beginning of November. I mean, then we got to start to talk about some of these catalysts, right? Because that's going to throw a wrench into our, because these charts could change a heck of a lot.
Here's another wrench. Is I was reading through some of these banks research reports. First thing that Bank of America talks about is the debt limit decisions coming up in next year
Mm-hmm.
for the U.S. government, and those being an issue for the Fed. And I'm not going to speak to it like I understand the whole thing, but it was a very interesting point in that because the government is going to need money, it's going to be hard for the Fed to do their QT operations, their quantitative tightening, because they're going to need to be there to provide liquidity to the government.
Yeah.
Coming up here in about, I think in like February, you're going to see a situation like that.
I mean, that's perfectly timed with the end of the rate hikes.
Exactly. So it's, if we're looking out at it as a function of, hey, the government's going to need money, the Fed is trying to tighten and rate hike. The next piece of the puzzle is how bad is inflation right now? Okay, so then, are they do they have a real necessity to bring inflation down right now and really hammer us? So is this why IV is so low? Because people already understand that the Fed is likely to actually start backing off over time. I don't think they're going to pivot on Wednesday, or maybe not even in the next meeting. But I think folks are realizing, like, look, and this is why I said 18 handle, because it's like that's quite a ways away, and that lines up with what Jem was talking about in Q1 being sort of this situation where people are not going to be hedged or hedged right now. You can see it in the OI.
I understand the case that you're making, I think.
And so if you look at the inflation data, it's really not that bad. A lot of it's coming down.
Yeah, I think we saw that with with the housing, actually, like that 10%. I saw that and I was like, oh, finally something that's indicating a little bit of slowdown somewhere.
Yeah.
And if you see that come through, and housing lags a lot.
So now we're getting a little bit more macro, but I think it's important to maybe add some context to what is happening right here. I think this OI personally are stubborn, late bears essentially, or older bears. that are sitting there from when things were really bad. I think they're still there.
But I still have an issue with the idea that we're not going any right, because we definitely have to go lower on the S&P, like talking 340s, 330s eventually, simply because the contractions that are coming from right, because we haven't even started to see what the tightening is doing to the economy.
Yeah,
and
it's definitely a lag that we don't know yet. You're right.
and then that can have ripple effects in all sort of things. So there's this like, I think there could be this like fake relief that happens once we feel like we've seen the worst of it, right? That seems to be what you're talking about.
That's sort of where I'm going with it. Is I think people are trying to see the light here, and you're seeing that reflected here in current demand for puts going down. But I think there's still a lot of old bears that we're kind of looking towards this fall time, which is usually when the crashes start happening. 2018, this is when
That's super convincing to me. I think exactly. October, oh, look at that, no crash.
Yep. And once these events kind of pass, then there's going to be sort of a FOMO sort of, and we talk about a Santa rally or whatever it is, call it whatever you want. It's going to be a situation where everybody feels like the Fed has solved the problem and we can get back onto the, get back to the good old days, right? Where we're just,
well, and that's when we're going to realize that the good old days aren't coming back, at least not for 5 years or something like that.
No,
I mean,
yeah, the good old days, if you look at it in the context of like the last 40 years, sort of what Jim talks about is we've been sort of just low rates, free money for 40 years. That's not coming back, but maybe some sort of amalgamation of it would come back, and that's, I think, what people are hoping for. Something where inflation is 4 or 5%, people still got their jobs. They still got money. We can sort of start grinding back up again. It might be a little choppier than we're used to, in the last 20 years or so, or since 2008, where it was just sort of just straight up in a way. I mean, there was some fluctuations there, but I don't think it would be like that. But you know what? We could start grinding back to all-time highs. I think this is sort of going to be the psychology of folks going into the end of the year. And I think once you start seeing the flip side of what this OI chart looks like, that is going to starting to be the tell of when the end is near. And that's why I say I think you could possibly see this 18 VIX, 17 VIX start printing again. And we're looking out. I'm not talking about next week. Obviously, it's going to take a while for the VIX to kind of grind down there. Maybe, I would think.
Yeah, that's what I was going to say. It's almost as if, it's a super interesting theory. I don't even know that I'm comfortable thinking that far ahead. I'm really just trying to understand the puzzle of November still.
Well, that it comes into play only because people trading right now are thinking about that. And so you've got people that were thinking about this week and next week, a month ago, and that's where they're at right now. That's what this positioning is showing to me, is like these folks were already positioned here. I don't think this OI chart has looked like this for like 2 weeks.
Yeah.
Even after with the expirations, it still looks like this. And it's just like, these people they've just been here. Their puts are just sitting there. And they probably felt some pain this week, but
well, and I mean, a lot of what you're saying actually explains, because there was a little bit of a puzzle in my mind, and in the back of my head, I knew it was going to happen and I played for it, but it was weird to me to see that those tech earnings just fail so terribly. I mean, I'm mostly talking about Meta and Amazon. I don't know if that exactly counts as tech, but also Google, right?
Yeah.
And then just have that reversal for seemingly no reason, and no gamma related reasons either, in a sense, right? Like it wasn't gamma obvious, that one.
It wasn't gamma obvious yet. And that's where the OI charts for me, and if people are listening and they're learning about GEX and stuff, incorporate this OI chart every day into what you're looking at, because the gamma chart will make so much more sense once you understand where everybody is positioned. And that's what I think anyways. And then the skew chart will help you understand the gamma chart. a little bit better. So let's talk about the earnings real quick. You got the charts over there.
Yeah.
Let's look at Meta, because I see Meta there. This was the picture, the skew chart of Meta. And this is sort of what I feel like is the skew from SPY is going to look like. It's going to maybe be a little bit more left-tailed, but I feel like this is what it's going to end up looking like before the crash. That's okay. When I looked at this, I was just going, dude, is nobody even thinking right here? Everybody thinks Meta's bottomed out.
Yeah.
They're looking at their falling wedge, which the falling wedge looked really nice because it already dropped a whole bunch. How much more can it possibly go? Well, this is reflecting what people thought. So I need to,
and look at how cheap the puts were. Like, look at, in retrospect, that seems crazy, right? Over here.
Yeah, and in retrospect, which is always, 2020, but it's like, yeah, when I looked at this, there was zero chance. And this is because of you in our last podcast, when you said on Snap, you were like, dude, I would be selling calls all day on that skew. And it was just two fat tails. It was fat tailed on the right and left.
Yeah.
This was the same. They had the same concept for me, where I was just like, there's no way I would buy calls here with this. There's zero chance.
No, look at how expensive those are. And we all know that calls kind of suck in the sense that you're not really getting as much bang for your buck.
Right.
If you're playing what would you call it? A binary event.
Exactly. I'm going to show you, I'm going to try and pull up Meta right before earnings. I'm going to show you what I think this is another reason why you can use the skew to sort of give you an idea of where everybody is at. So let me see if this is it right here. I'm going to send it to you. I think this is it. I'm going to send it to you. See if you can pull this up.
Okay. We have around 8 minutes left, by the way.
Okay. All right. So we're not going to get through as much as I was hoping, but that's okay. We'll leave some other stuff for next week.
All right, here we are.
All right. So if you're looking at that skew and you see this GEX chart here, I mean, to me, it's going, dude, these folks are about to get obliterated. And then you can look at, I could even tell, and I'll be honest, I use some of the FOMO in the chat as sort of a gauge too, because it's just like, I don't know what these guys are thinking right now. And I hope they're right. It's not like I'm hoping, they get destroyed, but it's like,
this is the same thing I was talking about. I mean, you can see it a little clearer here. Same thing I was talking about with Snap. If you look at that, if you look at where the bottom of that IV curve is, right here, right? This is what market makers were pricing in, at least, like right here on that day, at least.
Yeah.
Right. Which is just a little bit under spot.
Look where the 100 strike is, though.
All the way down here. Yeah.
So in my mind, I thought it was so.
Sorry, I'm looking at it the wrong way. I'm sorry. You could see it over here, right on this side, right? The implied vol on the puts.
Yeah.
And here, that's where you see your 100 strike, right at the bottom of that. That's the same as Snap.
I chose the 100 strike because it was at the bottom of the distribution. And remember, we talked about how you had this mirror effect of, if everybody is on one side and you get the reversal, then expect it to go the mirror effect on the other side.
Yeah.
And
that's exactly what you got. And to be honest, that's something, similar things happen with Amazon, right?
I think so. I didn't look at the new Amazon GEX. Actually, I have. Yeah, it is similar. It is pretty similar to what happened to Amazon, because right now Amazon is pretty bad.
Let me see if I can pull it up. So this is your Amazon vol at the mid smile. Actually, I mean, this looks really, because I think it's because of I forget what the timing of this chart was.
You can see it down there. It was right at close, pretty much.
That one was right at close.
That one was the most.
Okay, but this one is what, this will help a little bit, right? This is the net GEX on Amazon that you sent me.
Yep.
And clearly, what was it? It was trading at 111. People were positioned for the 120, 125, 130. And then we had a little bit of positioning on the downside here at the 100 strike.
But look at the OI.
And then let's check the OI. Okay.
And so it was a little mixed for me, which is why I didn't play it. It wasn't as clear as Meta was.
Yeah.
Because there was a lot of positioning on the downside here. There was way more positioning on the upside. And you can see like up in the 155s. I mean, they've had their chance to get it up to the 150s. Those guys are dead. Amazon would have to come up with something insane to be able to get it back up there. So those guys are dead. And this is the process we talked about. Eliminate where it's not going first. And
but the skew wasn't as clear as with Meta, I would say.
It's not as clear, but look at the future dated. And we're talking about a bear market right now.
Yeah.
Folks are not ready for it. And it doesn't mean the stock goes to zero. It just means, at least for this event, folks were not ready for it. And this is something I missed. I was looking at this and I was going, gosh, I'm so new to using skew. I'm not sure about this. But looking back, I should have been, because it was very clear that these puts, we're talking about Amazon, dude. I've seen Amazon puts be 400% IV.
Yeah. No, you're totally right. And the other thing here is, and something that I kind of messed up when I was looking at this chart is, this skew to the right, like we should have downside skew here. This is nothing.
It's really not
very little.
It's not, because it's really only like 260 to the extreme, and like 200 on the upside. You're talking about a 60% difference here, maybe 70% difference. And extremes.
Okay, so sorry to interrupt, but we have around 3 minutes left. So I wanted to ask you about them. Like, what do we think about this coming week, about November? Just to sum things up.
Okay. I personally, just real quick, I think the events are what are driving the flows right now. The FOMC. You have the beginning of month. So Tuesday should be really interesting with the 401k rebalancing that always occurs on the 1st. So that's sort of why I'm bullish into the event, into essentially the morning. You also have a VIX expiration that happens on FOMC. So understanding where the VIX is positioned right now is going to be super important. And then the readings at the end of the day on Tuesday, I think, are going to give a really good idea into the election, the midterms. So those are what I would be watching. And after that, there might be some fake downs on FOMC, but I think you should be long into the end of the year. Just based on what I'm seeing here.
Yeah, I was, and you were talking about last time, we were talking about heading back down at some point, and now it almost feels as if we're running out of time to do that. We're running out of time and running out of position to do that.
That's exactly right. Yeah, they had their chance. These bears had their chance to basically essentially get out, but now I think they're just done. They're done into the end of the year.
Well, the other thing is, and this is something that I think I mentioned before, is that FOMC, we're going to get the 75 bips, and it's an elimination of uncertainty. And we're not going to get more than that, and we're not going to get less than that. There's like a virtually 100% certainty. And so as soon as that was the case, that actually set us up to be bullish into FOMC. And then the midterms, I think, more of a mixed bag. So it's a little hard to see that far ahead, but yeah, I don't see any reason to expect anything massive anywhere soon.
Yeah, there obviously always is that tail risk. So a nuclear bomb going off in a big city or something obviously will be the catalyst to really crater it. But does that happen or not? That's up to you if you want to bet on that.
Yeah.
If you're betting on the probability distribution, then at least I think the bet is to the upside. 4,200 or 4,200, maybe higher.
And we're also entering into vol suppression territory because VIX-X is on the 16th of November. So we have stabilizing FOMC and then VIX-X. So
exactly. Yep.
Good luck, bears.